Hi, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst for OANDA Asia Pacific. So, very good morning to all. Today is the 30th of September, Wednesday. So, before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, so leverage trading is risky. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. So as usual, our top three, we call it key takeaways for this daily dose of market insights presentation will be a recap of highlights and key events that took place yesterday, what's next for today, and what's next, that means i.e. what are the things to look out for today that could have an impact on the global financial markets, and as well as the short-term technical analysis outlook on the various asset classes that I'd like to share with you all that have that exhibit interesting configuration. So let's start off. What happened yesterday is, as you know, yesterday the major event for yesterday was Apple flagship event, which actually introduced the launch of their new line of iPhone, iPad, and watches. So why Apple event is important? Because number one, Apple is a key US services and product export to the rest of the world. That means it's a crown jewel of US in terms of services and product. And most importantly, Apple is the highest weightage US component stock inside the S&P 500 and the Nasdaq 100, which is considered as a significant, we call it a must-have of a what I call product in global, a must-have in terms of a stock in global fund managers portfolio in order to be in line with the performance of the US stock market. All right. So what happened to Apple yesterday? So seems to me that Apple actually bite the buck of buy the news, sell the event. Okay, that means i.e. initially was a bit of hype up at the start. Once the event took shape, the stock price actually plummeted, which is happened yesterday for Apple. So Apple actually fall to an intraday of -2%. So let me share with you the screen of what happened last night in the Apple share prices, and most importantly, how does it impact the benchmark US stock indices? All right. So now let's focus more on the screen. So what we could see over here is that this is what happened yesterday, a sea of red in the US technology sector. So definitely for sure, Apple is the one that is dragging down the rest of the information technology. At the close, it almost went as low as -2% plus intraday. So at the close, it went down -1.7%, but that actually dragged down the rest of the information technology sector. Even Tesla got hit as well, -2%, because they being part of this. Tesla, even though it's not a technology stock, but they are being part of the seven, we call it magnificent mega cap stock that actually contribute to a significant portion of the gains so far this year on the S&P 500 and the Nasdaq 100. So this is how we call it very interesting movement of the market works, especially in the short to medium term. Once a significant, we call it a component of a leading, we call it leading stock, which is Apple, caught a flu bug in the short term, it will start to spread to the through the rest of the sector as well. Okay, and the cohort that is actually holding the fort of the US stock market, which is the 7 mega cap stocks. So all in all, right, what we could see over here is the Nasdaq 100 was the worst performer yesterday, down -1%. The S&P down -6%. The Dow Jones actually almost unchanged at -0.05%, and the Russell 1000 is almost unchanged. So this is the share the price action of Apple. So why am I analyzing the share performance of Apple based on a technical perspective? Because like I mentioned earlier, Apple is the biggest component stock in the S&P 500 and the Nasdaq 100. Whatever happened to the price of Apple in the near future could potentially cause a negative drag on the S&P and the Nasdaq in the near future as well. So as traders, we got to be mindful of these key component stocks if they are starts to actually trace out either positive or negative technical configuration, especially we are actually looking for a short-term time horizon. So if you look at Apple over here, yesterday it has a negative price reaction, failure to close above the gap down that was actually formed last week. So this gap down was actually triggered by that China negative news flow, where China regulators actually pull out a notice to actually advise, or I would say it's more or less is a policy to actually ask China, we call it government agencies to, as well as its related subsidiaries, to prevent or to ban the usage of iPhones by their employees. All right, so that was the negative news flow. So initially, after that, the price action of Apple rallied ahead of yesterday's Apple event. This whole what I call a bit of optimism before the event, then thereafter sell, or the sell the fact after the event took place. So what I could see over here is the price action is pretty bearish, volume is rather high as well. So right now it seems to me that Apple is now failure to actually cover the gap and go above that 50-day moving average, has started to actually inch downward as well at 105.95. So potentially, right, we start to see a breakdown below 172.17 could take us much lower towards the 200-day moving average at 166.17, and as well as this former we call it a key major pullback resistance now turns a major descending resistance turns into a pullback support, also confluencing at the 200-day MA at 166.17. So if this move starts to take shape, right, it seems to me that Apple has more short-term potential downside that could actually reverberate down or have a negative feedback loop, at least in the short term, on the US major benchmark indices. All right, so this is something to take aware of. And also, what other key news that took shape yesterday was actually ECB. So there was actually a ECB news leak reported by Reuters. So you know that ECB will actually have their monetary meeting decision later on Thursday, not today, on tomorrow, Thursday. And what this news report from Reuters actually reported, stating that on Thursday, ECB will also release its projection for 2024. So this projection is expected to come in above 3%. So it's actually much more higher than forecasted in June earlier, and also above consensus right now of 2.7%. So that being said, over here, that actually caused a rally in the euro dollar, which actually see this dollar setback actually took shape again yesterday. So all in all, right, if you could look at the dollar index from here, okay, very quickly, let me take out the dollar index for you all to see. Okay, so all in all, right, you look at this dollar index. So what happened after that news leak over here? The dollar actually gave back its gain and traded close to the low. And right now during Asia session, this dollar is seems to be that it's coming to fight back again, but it's still early days. So why? Because right now there's a potential catalyst that will actually move the FX market as well, will be the release of the US CPI data later. So now let me talk of this will be the key data to watch out for. That means today, not yesterday. So there's this key release of the US data. So on the US data, right, release over here, let's take a look at what's market expecting. So market right now, right, is actually expecting for the inflation rate month on month. That means this they are actually expecting an increase of 0.6% above 0.2% that was printed in July last month. And the year-on-year rate is also expecting to dip up to 3.6% above 3.2%. And the core inflation number, so the core inflation month on month is almost unchanged at 0.2%. The core inflation year on year is expected to dip down slightly to 4.3% from 4.7%. So the core inflation, right, if you look at, if you strip out, we call it excluding energy and food, if you look at the graph over here, it seems to be pretty much of a lackluster movement. The growth continue to decelerate since May this year. So 4.8, 4.7. So if it turns out as expected of 4.3, it will be what I call close to 1, 2, 3, 4, 5, fifth month of growth deceleration. So if that turns out as forecasted, it seems that the Fed itself will be more or less done of hiking interest rates. So market is still pricing in at least one more hike to come in November. All right, so over here, right, no change. So market is expecting a pause for next week at 5.25% to 5.5%. So this is the CME Fed Watch 2. So if you can just take a look at it to see what is market expecting the Fed to do based on the futures interest rate pricing. So expect one more hike to come in, close to 40% chance in the November meeting. To bring the Fed fund rate to 5.5 to 5.75%. So that actually we call it will conclude the current interest rate hike trajectory for the Fed. So this will be likely the terminal rate. Why? Because if you look at the probability for next year, so for next year over here, after 5.5 to 5.75% on the Fed fund rate, we do not see a chance of a high chance of we call it a hike to take shape, and rather the first interest rate cut should come in potentially in June to July next year with a high probability of close to 60% and 80%. All right, so this is what I call the current market pricing. But however, there could be a surprise in store. That means this surprise in store, that means i.e. the inflation numbers could actually come in above what market is expecting. So why do I say so? Because there's actually a nowcast. So this one called inflation nowcast by we call it forecasted by the Federal Reserve Bank of Cleveland. So what is inflation nowcasting? So inflation nowcasting is actually updated every day based into account of live component of the inflation basket. That means live component, especially oil prices that has started to tick up in the last 1 month or so. So if you recall in some of my earlier on is that oil prices, we do expect a further push up in oil price. Why? Because of the technical configuration as well as from OPEC tighter supply. So, but all in all, in the last 2 months, oil prices actually rose close to 20% in the last 2 months. So if you look at the nowcast over here, so the nowcast right now for inflation, right, for the month of August, month on month, for both core and CPI, they actually came in a number higher than expected, higher than the consensus forecast. So based on their nowcast, for CPI, they are just expecting month on month at 0.79%. So if you go back to the CPI month on month expectation is at 0.6%. All right, so the nowcast is actually forecasting a higher number. So similar for core as well, month on month, the nowcast is forecasting at 0.38%, whereas for the core, based on the consensus poll, right now is actually coming at 0.2%. So the forecasting is forecast. So the latest nowcast forecast based on live component is rather coming in more hotter than what is market is expecting. All right, so it's very similar for the year on year as well at 3.82% for CPI and core at 4.46%, whereas for the consensus, the core is core CPI year on year is 4.3%. So it seems to me that today will be much more of a volatile session upon the release of the CPI data. So definitely risk management is pretty much pivotal for today, given that we are now seems to be that rather we call it potentially there could be a much more hotter print on the CPI data. So that could actually see a negative feedback loop for definitely for stocks. That means for benchmark indices, and potentially the dollar will be pretty much mixed. Why? Yes, even though a hotter print may impact the US dollar on the upper side, but do not forget due to this leak on this ECB, we call it source, indicating that ECB might also be as equally hawkish as the Fed as well. So that could be a bit of mixed bag for the FX market. All right, given the fact that ECB may potentially upgrade its inflation forecast for next year. Okay, so now immediately, very quickly, let us take a look at the short-term technical outlook. So let us start with the indices first. So for the indices over here, let me start with Hang Seng. So you recall that the Hong Kong 33, right? Yesterday we have a bullish bias, looking to actually test the 18,229 level. So earlier this morning, the price action almost hit this level, printed a current high intraday high of 18,204 before sliding down. And after the way it slide down, if you look at the hourly RSI, the hourly RSI has broken down below its corresponding short-term ascending trendline support and goes down below the 50 level, indicating to us that the earlier bullish short-term momentum has been negated. So given the fact that today is what I call, we do have a pivotal, we call it event taking shape, which is the release of the US CPI data. Like I shared with you earlier on, we could see a pretty much hot print later. So I'll rather turn neutral for today on the Hong Kong 33 to trade neutral between 18,290 and 17,790. Only a clear breakout above 18,290 could potentially resume our short-term bullish bias towards the next resistance at 18,570. So then without further ado, let's take a look at the US indices. So the US indices, definitely the Nasdaq validated our down move with the breakdown below the lower neutrality level that we have for yesterday at 15,370. So we'll be flipping to a short-term bullish bias for today on the Nasdaq 100, as long as the 15,550 key short-term pivotal resistance is not surpassed. Potentially it could look to retest the swing low of last Thursday at 15,170, which is the 20-day moving average, slash 15,085, which is the short-term ascending channel support in place since 18th of August low, and as well as this minor congestion area of 28th of August and 29th of August. So flipping to a short-term bearish bias on the Nasdaq 100, as long as 15,550 key short-term pivotal resistance is not surpassed. But however, if we start to see a clearance above 15,550, then potentially we could see a squeeze up towards 15,630, followed by 15,800 on the Nasdaq 100. All right, so now on the Dow Jones Industrial Average, so a bit of whipsaw yesterday. So I could see that it actually whipsaw around the 13,710 level, but it didn't actually break above the 50-day moving average. So this is a 1-hour chart on the US Wall Street 30. So still maintaining that short-term bearish bias on the Nasdaq 100. Why? It's on the US. Okay, pardon me, a bit tongue-tied about the US Wall Street 30 index, because price action still pretty much remaining on the bearish side, failure to break up above the 50-day moving average, and as well the hourly RSI start to shape that bearish divergence as well, where price action start to shape higher high, but the RSI didn't manage to actually shape higher high, but it kind of shaped a similar highs right at close to the overbought level. So still maintaining that short-term bearish bias on the US Wall Street 30, because given that yesterday's whipsaw, I will have a higher short-term pivotal support level, which is confluencing with the swing high area of 1st of September and 4th of September at this 34,890 level, okay, which is this level here, 34,890. So as long as this level is not surpassed, potentially the US Wall Street 30 could see a further downside test to test the intermediate support at 34,520. A break below it could take us down much lower to retest 34,335, which is the swing low of 7th of September. All right, but however, a clearance above 34,890 will negate the short-term bearish bias to see a squeeze up to test this former support level of 7th of August and 15th of August, now turns into a pullback resistance at 35,050. So flipping to a, so still maintaining that short-term bearish bias on the Wall Street 30. So now lastly will be the German 30 index. So German 30 index actually fall below our tighter key short-term pivotal support level at 15,750 for today. So price action now has going to inch much lower. So what I will do over here is I will actually use this level here. All right. Okay, let me highlight this. Okay, I'll use 15,780 as my key short-term pivotal support for today. So as long as 15,780 is not taken out on the upside, potentially you could see a retest to last Friday swing low at 15,570. A break below it could take us down to the all important 200-day moving average at 15,470. So flipping to a bullish bias on the German 30 index, given yesterday decisive breakdown of that short-term pivotal support level at 15,730 mark. So using 15,780 as my key short-term pivotal resistance. However, if we start to see hourly close or clearance above it during the European session open, then we could see a kind of a whipsaw configuration to retest 15,850 on the German 30 index. So flipping to a short-term bearish bias, holding below 15,780 for the German 30 index for today. Now, moving on to the FX space very quickly. We have a couple of minutes more to go. So on the FX space over here, let us touch with the various FX pair that we highlighted earlier on. So let me share with you the sterling dollar. So on the sterling dollar, right, it's still kind of sideways. Didn't actually break down below 24.45 despite yesterday's earlier push down. Then thereafter, after that ECB news came out, the sterling dollar managed to find a bit of support again, inch back up, and right now try to trade a bit lower below the 125 figure level. So still no change here, using 124.45 as a key short-term pivotal support, which is also the 200-day moving average. Potentially we may start to see a bounce to retest the 25,550 key short-term resistance level or intermediate resistance that we have on the sterling dollar, which we also highlighted yesterday. All right, but however, if we start to see a breakdown below 24.45, then we could see a continuation of this short-term bearish trend towards the next support level at 23.40 on the sterling dollar. So now very quickly, let me touch on the euro dollar. So on the euro dollar, right, if we could look at the daily chart first on the euro dollar, so this was actually that spike up earlier on that news flow that take shape that news flow that take shape yesterday during the late US session. It came very closely towards the bounce, actually came very closely to the key medium-term swing low area of 31st of May and 7th of June this year. So if we go down to the hourly chart on the hourly time frame, it start to trace out a series of higher high and higher low at this point in time. So the RSI still managed to hold above the 50% level, 50 level mark. So with that, right, potentially, right, we could continue to see this bounce to take shape over here. Oops, let me draw a parallel line. Okay, this bounce to take shape, holding above this key short-term pivotal support level that I will have for today will be at this swing low area here, yesterday's US session swing low at 1.070, at 1.070, looking for a potential push up towards the next resistance level, next intermediate resistance level at this level here. At 1.0 at 1.080 level. All right, so still kind of a maintaining this short-term potential corrective bounce on the euro dollar, given that this short-term hourly chart has started to trace out a series of higher high, higher low, as long as 1.070 key short-term pivotal support holds on the euro dollar. But however, if we start to see a breakdown below 1.070, then we could see a further slide to test that previous June and May swing low area at 1.0670 level. All right, 1.0670 level. Yes, this support level over here. So with that, we come towards the end of today's session. We come to the 25th minute mark. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you. Test, 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 test. Test, 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 1, 2, 3. Test, 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 1, 2, 3.